the bond market really didn't listen. What has changed their mind, and what does it mean for yields? Are we going to see the 10-year break above 2% now?
Well, a lot has changed over the last couple of weeks. I think what you pointed out earlier in the program about Treasury Secretary Janet Yellen's comments on inflation, and that it'll be higher than Americans have seen in a long time, and the fact that even Chairman Powell is saying that transitory is longer than what we initially thought. It's no more weeks or months. We're talking about quarters. So I do think that this will have an impact on expectations for higher inflation, which is a key input for the Fed. So the Fed looks at actual inflation and expected inflation. And if expectations are going up, as we're seeing that priced through either surveys or priced through inflation-linked bonds, that does create a situation where the Fed is responding, and we're seeing that in the talk. It's becoming more hawkish, and so we can expect more rate hikes as the market is pricing right now.
So again, what does it mean for the bond market? Is this in fact, it was interesting because after Jay Powell, the Fed chair, spoke on Friday and said that the greater risk now, he finally said it, kind of admitted it. No, the greater risk is that we're going to see persistent inflation, higher inflation. I'm definitely going to start the taper. Rate hikes are a way off, but that reassured the bond market. There was a little bit of a rally. How is the bond market going to react when the taper starts and down the road? Is it going to help flatten the curve?
Well, there's the worry that actually faster tapering or more hawkish Fed will create the risk of a slowdown. I mean, there are many other impacts which are kind of negative. Earlier in the show, you mentioned China. That is a risk to global growth. We also have the fact that a lot of the fiscal stimulus around the world is kind of rolling off. So they're all negative factors which worry markets and investors about the sustainability of the growth trajectory. Nevertheless, and I think that's how bond yields react sometimes when they see the higher risk of, or the risk of a higher central bank path. Now, what that doesn't mean, though, is that yields are not going to continue to go up. So they will continue to rise. Everybody talks about them rising gradually, but often yields follow a path where they kind of jump higher. So to your earlier question of where one can reach 2%, I think that's highly likely in the next 3 months. We have been on a path which is showing that yields can rise faster. There'll be ups and downs as people worry about growth. I think growth is a worry. But this inflation which is rising, inflation expectations which are rising as well, does mean that bond investors are going to want some kind of more premium than what they're getting right now, even though what we're having right now is higher. But just to remind everyone, we're still not at March levels, March 2021 levels. We're still a bit lower than those.
Despite concerns over China, are there now opportunities?
Well, there are opportunities because valuations on the equity side are reasonable, and they're much lower than most other regions in the world. So a lot of priced in terms of Chinese equity valuations. So I think it does give rise to opportunities in the Chinese market. But of course, we do see news which comes in and out, which is good and bad. I think the Evergrande news was actually quite good. But I am expecting, though it's becoming more difficult to see, some policy easing from the Chinese side, and we haven't seen that yet.
In the FX space, Asian FX, what are you leaning towards now?
Well, Asian FX actually had underperformed markets quite, or most other markets quite significantly over the past year. And I do see some currencies appearing to be cheap. I still like the Chinese currency, but I like the Korean won as well. I think that the Korean won is cheap. It has generally followed what's going on in terms of Chinese growth, and that's largely priced into the won. And a lot of seasonal poor effects on the won are behind us. The Bank of Korea is also a very hawkish central bank and has been signaling that it will hike policy and continue to worry about inflation and financial stability. So that's why that's one of the currencies which I like. But I think generally Asian currencies have underperformed and probably have room to stabilize or to appreciate from here.